I'm happy to be here to take you through this. I know it's it's a bit unusual for a semi-retired person to be here. I feel this is actually way past my afternoon nap. So if you see me struggling, please understand. Yes, so this is exciting. Happy to be here and with a great panel coming up. I thought before we do that, let's just lay some context onto what REIT investing is and how has it been doing. I'm very delighted that I was part of this journey right from the outset in 2015 when we put out the first REIT. And it was a real test case. We didn't know how this would work. I remember he's called Morada from Stanbic, came to my office and said they want to do this REIT. We had developed some regulations around it, and we were all saying, okay, let's give it a try and see how it plays. And man, has it been a journey. So really happy that by the time I was leaving the exchange, we had 4 and more to come. And really seeing all the players who've come today is a testament that this is a great asset class that we'll be actually making a great success of in the near future. So glad to be in this incubating workshop, and thanks Zarava for the heavy lifting. I know it's been a very heavy time. And yeah, I'll take you very quickly through a couple of slides and just trying to justify why REITs are really an attractive asset class. I think to start with, you know, for a long time we've been, as a market, known for just 2 asset classes, bonds and equities. And so I think there was need for a third one that would basically be able to match the character of those 2 asset classes. One, steady returns, consistent returns, and secondly, low volatility. And I think the REIT asset class does match that. And so in this slide, basically we are showing you what's the risk return profile. And as you can see on that graph, REIT sits right in the middle of those 2 extremes. So low volatility, better returns, low risk. And I think equally on the cash yield vis-a-vis capital appreciation, it has the best of both worlds. I mean, it does have a fairly good yield. I was sitting on a table there where they were saying between equities and bonds, where does the REIT sit? And somebody said the returns are better than equity. And I told her, add for now. Because you've just yet to see the best of the equity markets. I think we just started boiling up. I was actually asking my colleague, did they have to sit on this good performance until Friday evening for Monday headlines to read that Kenya is the best performing market? And I think we're likely to see that happen. So REITs provide the best of both worlds. And that's what I'm saying. I mean, in terms of managed volatility and equally a better return. We then look at if you look at the stability over time, and again, just talking about the volatility issues here, the graph there represents how the REIT market performs against the currency volatility, as you can see, and interest rates. And again, it does provide less volatility over time. So anybody looking to match that, especially long-term investments like pension funds, then REITs prevent that very, very asset class. The tax efficiencies provide additional value to you as well, and it's got a better inflation protection, and that's what we're trying to justify there. In terms of character, just speaking to that again, you know, REITs provide the ability to have properly managed property, where you're relying on investors, you're relying on a proper management team, shown there. Again, it's very liquid, depending on whichever asset class you go for. And really, the REIT managers have a job to do, and that just takes away that heavy lifting or headache from you. When we did the last analysis of how transitions have happened in the US of pension funds, you find that close to 98% of pension funds' property asset class are actually held in REITs. And just about 2% is in property, direct property. So I think that's the kind of transition we hope to get from here. But it will not just take the effort of the NSC on this side, or the CMA, or the Incubator team. I think it will be a joint effort to help that transition. one of the biggest risks we stand as pension funds is that whenever we have a mass layoff or a mass payout, we normally liquidate the more near cash assets. So what suffers are our liquid cash assets like bonds, equities, and fixed income. And your direct property investment, you can't portfolio, you can't liquidate. So what happens is at the end of the day, you actually interfere with the allocation structure of pension funds. But when you have a REIT, you're able to sell those units, and you can actually then take a fair haircut across all asset classes. So this is how you manage a proper scheme. And that's why we think REITs have a strong case. Direct vis-a-vis indirect, I think these are benefits have been justified here quite a lot, but I just want to emphasize that the reason why the REIT market came into being is that we wanted to create an opportunity for property to be managed better, you know, for more efficiency, for more transparency. I think even today, schemes are holding properties that are either overvalued, that have either been bought at very expensive prices because of lack of transparency. And for a long time, and that's the reason why we're having a challenge transitioning or reducing our property exposure among pension schemes. Because if you look at the historical costs, vis-a-vis where markets are, then there was something that wasn't handled well. But for the new schemes or for new investments, going into REITs then basically removes that opaqueness completely, and then makes the scheme more transparent and better managed. And again, notwithstanding the fact that it's a property is managed by different managers, and it really provides higher benefits going forward. So I think I like the conversation around sustainability, and REITs speak to all of these. We're talking about matching the SDGs, especially around urban development, employment, and the environment. I think if there's one tick box you need to do whenever you're doing your sustainability assessments, then REITs provide you with that easy avenue to achieve all that. And that's what we're trying to say on that slide. I'm really passionate about sustainability, and when I saw that it's really the way that investors are looking at, they want to see what asset classes how are you embedding sustainability into portfolio management. I think there's no easier way than this. This is the way to go. Great. So I think that is just a few nuggets for us to move on to the next discussion. And I'm really delighted that I'm sitting with very experienced individuals, some of whom I've worked closely with, some who are my mentors, and some who are now taking the property markets to the next level. So we're very happy to have Ngatia here from Kempfic, who will basically be giving us insights on how they've been able to aggregate pension fund money and want to channel it into infrastructure, and what are the successes. I was hearing yesterday about some of the key successes that Kempfic have done. I really want to unpackage that so that you can be able to demonstrate that consortium investing is a very exciting opportunity, and how do you go about it? I think that's important. Fred Mburu opened the door for me into the fund management industry when I knew nothing much about it. And so I owe Fred a lot. And now as the CEO of the FMA, Fred's a very seasoned fund manager for many years. So again, the pension fund conversations will be very relevant coming from Fred to give us insights on that. And finally, Mbithe, Muema. Mbithe was the chief business officer, is the chief business officer. Why am I saying was? Have I left with you? Is the chief business officer at the Nairobi Securities Exchange. Very seasoned corporate finance, investment banking personality, and I'm sure she'll be able to unpack that. And the REIT product sits under her at the exchange. So that's a great panel I have. I know I've got just about an hour before we go into the deal rooms. And really, I hope that this will then present you with the good questions you could ask Sam and his team about how to execute the mandate going forward. So thank you very much, and I'll take it now from here. Thank you.
Just to be clear, we've got 45 minutes. 45 minutes. All right. I'd just like to invite you all to turn on your microphones, take a seat, please. Jeff, thank you so much. And I think Mbithe, Ngatia has only just turned up, so do you want to maybe start and just give us an overview of what you're working on, your thoughts for the day, and then we will go across the panel, and Mr. Odundo can take over.
Thank you so much. Good afternoon, ladies and gentlemen. I beg your pardon. I think when you called me up earlier, I was taking a work call, but you've been able to delegate that and come back here. I think I'll start off by saying thank you to Mr. Geoffrey Odundo. He's the one who opened the door for me at the Nairobi Securities Exchange. I've been there for 2 years now, and the mandate I was given was to be able to champion the uptake of different products from the exchange, one of them being the real estate investment trust. When we came in, we had Islam, and we also had Acon that had come into the market. Thereafter, we were very delighted to then introduce LapTrust, REIT, last year. And we've been working a lot with the RAK, with the Fund Managers Association, and also with potential issuers. And I think what we've been able to appreciate is we do need to offer technical capacity with regards to financial modeling, preparing business models. How do you actually package the value proposition for REITs, for your decision makers in whatever institution? We've also had a lot of support from different associations such as UpTech, where our work is really just to go and do a lot of marketing. What is a REIT? Why should you even care for a REIT? How do you make money from a REIT? And sometimes we've actually had to simplify it as saying, it's literally taking your house, putting it here, and it's like shares. Sometimes we speak in Kamba, sometimes people speak in Kikuyu, sometimes people speak in Swahili, just to ensure that that message cuts across. Nonetheless, in our work with regards to the REIT Incubator, we've been working with Zorava, and the question has been, how do we actually break down the regulations and the route to market for a REIT, from the process where you start talking about a REIT till that process where you actually present an information memorandum to the NSC and to the Capital Markets Authority for approval. In that, then we're able to bulk at least 3 to 4 key stages that needed to be considered. There's the first stage before you even make a decision. How do you actually prepare this discussion for your board? How do you actually have a business case showing you your revenues and your costs? And then we had started unpacking all the existing REITs. And I think the one that was most exciting was looking at the LapTrust REIT. And one of the key things that came out was the fact that before they actually transferred their properties into an REIT, the properties were actually amalgamated with the administration business, meaning that there was a dilution of the direct revenues from their real estate property. So they had the real estate property and the non-real estate property all coming in at the top line at a CPF level. However, the administrative costs for all the businesses, including the administrative costs for the property, were also amalgamated, which actually resulted in a dilution of the earnings from the real estate. When they transferred 7 billion worth of assets into an REIT, then they actually then reduced the costs that were affiliated to the real estate. And that's been one of the key value propositions that we've been saying. You run a REIT at less than 2% because you are a seasoned manager, and then the REIT allows you to bypass the corporate tax. So as long as 80% is going back to your original holders, you're actually giving a higher benefit when it comes to the real estate. So those are some of the case studies that we've been doing, and we're quite excited for the deal room later on today because we'll be happy to present an investment opportunity of up to 40 billion shillings that we've been working on. Thank you, and back to you, Jeff.
Fred, do you want to pick it from there? Just give your insights and how you think the day has gone so far.
Okay, thank you, Jeff. Good afternoon, everybody. My name is Fred. I represent the Fund Managers Association. I recently joined them to head the secretariat. Previously, I was a practitioner. I looked after an investment house. But I think fund managers have been accused, I think wrongly, that we have not supported REITs. I think I want to tell you that the conversation is beginning to change. I think previously we invested in very traditional vanilla products. We either went for bonds, equities, FDs. I think we learned a very painful lesson. 2023, for those of you who are members of a pension scheme, I will not break the news to you about your statements, what they might look like, your member statements. But basically, we had a very difficult year as fund managers, highly exposed to traditional treasuries. Interest rates went up, so bond values came down. And therefore, the conversation is beginning then to change. So REITs is now coming to the forefront of many investment houses in terms of discussion as a viable alternative investment route. for various reasons, and I'm sure we'll discuss that later. So as a fund management fraternity, we're excited to be part of this conversation about developing REITs in this market.
Ngatia, maybe you can some intro, then we can go into the questions.
Thank you. And good afternoon, everyone. First of all, to our hosts, thank you for having us. We love participating in these forums as KEPFIC. So my name is Ngatia Kirungie. I am the head of the KEPFIC Secretariat. KEPFIC stands for the Kenya Pension Funds Investment Consortium, which is an association of pension schemes that have come together to jointly assess and invest into alternative assets, including REITs. And the genesis of all this, I think, has been touched upon, but really it comes from the situation we find right now where our pension portfolios are heavily concentrated in two asset classes, basically. There's government debt, and there's a handful of equities. Those pension schemes that do have property, you find that their investments are probably in the direct property holdings, which has faced various challenges, including liquidity, valuation challenges, and the likes. So what we are trying to achieve through KEPFIC is two things mainly. The first is to increase the awareness of these alternative investment products to the investment community. We are conservative investors, as you can imagine. We're not looking to be pioneers in anything, so we want to ensure that by the time we are actually putting down any investment, we are fully aware of the risks and some of the intricacies of the REIT instrument and the underlying asset. The second mandate we have is to bring live opportunities to the table, so that this discussion about capacity building and the need for that is not theoretical, right? We want to be able to show well-structured, viable investment products to pension schemes so that they can now seriously consider those investments. And we're working very closely with the REITs Association of Kenya on that. Very happy that today we'll get to hear some of these investment opportunities. We're also working with the NSE, the Capital Markets Authority, because what we have found is that utilizing capital market instruments really is the game changer. So we're happy to be here, and I think this REIT conversation is very timely. When we think about alternative assets in general, and you think about private equity, private debt, infrastructure, you find that in our market, REITs are further along than the other asset classes. Yeah? And we're happy that this momentum is continuing.
So I think when you're sitting with a very esteemed and highly professional panel like this one, you feel they've answered all your questions. But just to get some insights to this, maybe starting in Ngatia. The conversations this morning spoke about doing investments in scale. To have successful REITs in this country, you need to have scale projects. We're currently aware that the government is doing affordable housing in scale. There's massive infrastructure development taking place, especially around residential. But those are still taking a direct approach. What does KEPFIC plan to also play a role in trying to aggregate pension funds? What plans do you have, and how would you approach in also being part of investing in these scale projects and trying to unpackage REITs as really a more viable option? Yeah.
Sure. Well, you can aggregate in two methods. One is to create a vehicle and try to bring in, disparate pension schemes to invest into a vehicle that will then now go out to do the property investment. That's very difficult to do. But capital market instruments can achieve the same thing. If you have a bond, if you have a REIT, essentially you have a vehicle through which each pension scheme can invest 50,000, 100,000, all the way up to 100 million, if not more. So utilizing capital market instruments, like I mentioned, is the direction we're going.
And in your experience, maybe you can then give us an example. In KEPFIC, have you seen such successes in any project where pension funds come together and allocate capital to a common project, and what's been the outcome? Maybe just give us some insights on that.
Sure. In the last 3 years since we launched, we've been able to mobilize over 13 billion shillings. That is in that was in one REIT, the Akon REIT, project bond, road bond, and KMRC. What do all three have in common? Capital market instruments. Yeah. Whereas direct investments, a little bit more of a challenge.
Yeah, I think that's just a demonstration that actually, for scale to be achieved, it calls for collaboration. I had the word collaboration this morning, and Catholic seems to be doing that well. Fred, you became a fund manager before I was, and you put all this money into property directly. Have you seen a transition, or have you seen a mental shift from trustees into this new into the REITs market? What's the inhibition that trustees have? Because what you're saying is that we've only have 4, yet most pension schemes are holding quite a number of property directly. What's the key challenges facing them?
Thank you, Jeff. I think from a trustee challenge point of view, first has been around education for some segments of trustees. And I think a more important one, especially for the bigger schemes, has been around sentimental value about holding property directly. So there's beginning to be now a conversation around moving into a REITs arrangement. So it would not surprise me if in the next couple of months, couple of years, we then start seeing a push, in fact, coming from our clients who are the trustees, moving direct property investments into a vehicle such as a REITs. So there is that conversation. The sentimental value, again, we'll have to discuss, because you could go to a board meeting where the moment you talk about moving property X into a separate vehicle that is not necessarily owned directly by the scheme, then you'll get a different outcome in terms of that. But it is something whose time has come, and we will see that shift in terms of appreciation of REITs vis-a-vis direct investment.
Mbithe, you have been behind the listing of a number of REITs in the market. What's been the motivation of these clients in listing? What has brought them to the market? And what more can be done to encourage others to use the same approach?
Thank you for that question, Jeff. For the REITs, I think we have seen an evolution from the first one and the motivations for the first one up until the fourth one. During my tenure at NSC, I think I've been privy to 2 issuances, so the Akon D-REIT and the I-REIT, as well as the LapTrust I-REIT. For Akon, it was a very efficient way for them to develop houses quickly, because they would use the D-REIT to acquire the assets, develop the assets, and transfer the assets into the I-REIT. At the time, there was no stamp duty, so it was very efficient for them. And as long as they were distributing over 80% of the surpluses from both the REITs, then they were actually then sitting on the benefit of not having to pay corporate tax. That was quite beneficial for them. Equally, at that point in time, it was also a means for fundraising, because as been discussed earlier on in the day, you're literally breaking it down and selling a piece of what you're going to do to many people. I think we do appreciate that from the work that they did, they were able to give the capital appreciation return from the D-REIT and combine that with the rental yield return from the I-REIT, which then began to open doors, especially from the fund management industry, because yield was quite important at the time. And once they opened that up, then I think the conversation for REITs became a bit easier. Now, for the LapTrust, theirs was more of compliance with the regulatory change with regards to how much they could actually hold in property. For them, then, they took about 3 years to actually reconstruct their book holdings. Because as I mentioned earlier, it was a conglomerate, everything was being bundled up at a group structure, but by the time they decided they wanted to do a REIT, then their properties, each property needed to have separate accounts. There was a lot of legal work that had to be done, so it took them about 3 years to prepare. But then once they did that, then they transferred their assets. And what was also interesting and innovative that they actually did, and a change that they brought to the industry, is they actually then sought an exemption for a hybrid trustee structure. So the regulations up until LapTrust required that you only have one trustee, and that was currently Cooperative Bank was facilitating that. So the LapTrust then reconstituted itself. It created a corporate trustee, and then it sought a hybrid structure working with a Cooperative Bank. So Jeff, you can see every REIT had a different objective, but what every REIT did all the way from ILAM up until where we are today, every REIT actually made a huge contribution in terms of opening up. ILAM started by first bringing the regulations and helping them be accommodated in the market. Then we went to ACON that then used it to fund a development and a rental structure. And then we have a pension industry that has come in. And I think the opportunity sets that we're seeing and most of the issuers who are coming in are of two sets. So it's the pension industry saying, how can we actually move our assets into the REIT? And I think also when you think about affordable housing, there's opportunity of then providing liquidity to be able to release capital that you can then take up other opportunities. Then the second class of investors that we're seeing are also then people who are beginning to get into the development state, and especially student housing. I think that's becoming quite topical with most of the people we're speaking to. So they're asking, how do we actually then achieve this over the next 5-year cycle? And I think the deal room would be able to enumerate some of these opportunities that we're beginning to see and emerge. Thank you.
So today we're here basically as to go through an incubator approach. Do you see the incubator providing the desired catalytic effect in getting more REITs to the market? And do you expect to see a more positive response after this session?
Absolutely. There was a lot of information, and the REIT structure, it's not an easy structure. There's a lot of regulation that you need to appreciate. I think we've had 2 lawyers in this room. At least the beauty about Kenya is English law is simple. The time I was in DRC and there were 5 lawyers in the room and everyone had a different interpretation. When it was converted to French, it was different. But at least here, our lawyers have the same interpretation of the law, but it's a lot that needs to be taken in. So there was what the lawyers need to do, what your transaction advisor needs to do, what your accountant needs to do. It took LapTrust 3 years, so you can sort of see every time somebody comes into the market, the time is actually shortened to market. So we must applaud Zorava especially because he's been championing the whole work for the REIT Toolkit and the REIT Incubator, and I think at this point we can probably give him an applause. An applaud. Well done, Zorava. I think there are times Zorava calls me 5 times in a day and I'm in a meeting, and I'm like, I will call anyway. What he brought, I think, for us to the industry is he said, all of us, accountants, lawyers, structural engineers, etc., are all needed. So we all sat down and we broke it down, like what is the role of each and every person, and at what point does each and every person come in? It's not to negate the work of the advisors, but it's to help a potential issuer to understand that I will have 1,000 or so steps. Okay, they're not 1,000, but I'll have so many things that I need to do. So before I start this journey, I need to sort of have a sense of, am I willing to actually stick it out? Then secondly, there were different work streams that are curated for every work. If it's for your financial modeling, there's a work stream that is led by the transaction advisors. If it's your legal opinion and curating your trust deed, there's a work stream that's led by your lawyers and what have you. And I think that has really helped break it down. And then as NSC and the Capital Markets Authority, we've also then come in, and as we then adopt, by the time something is coming to you, it's not foreign. So I think that has been a very great approach and a great appreciation by the industry in that regard. I think what's been most exciting then for us as the NSC, and really where I sit, where previously used to be my boss, used to ask me, what is the sales pipeline? And who's coming this year? And you got tired of my stories. So now this is an industry.
Who's coming this year?
I'll show you. So it's become an easier conversation now when we actually then have 4 potential companies that are seeking to come into the market, but we are not waiting for them to make the application and get the approval and then potentially get buy-in from the fund managers. We are sort of starting even the whole sales cycle way ahead so that by the time it comes to, it's not something foreign. So I think this is probably going to help us reduce the time to market significantly. It helps us all because we are all aligned in terms of how we are thinking more or less. It provides an easier way for the professionals to charge more. For us as NSE, by the way, we are the list. I can't even see how much we earn per listing. We are regulated. But at least it helps then curate that pipeline where every time we are all saying, where are we at, what's happening, what needs to be addressed. If there's any bottleneck, it can be addressed at an industry level. So we are quite excited, and the whole element of collaboration, I can assure you, is making work much easier. And I'm hoping that from today, if we start off with our 4, in the next workshop, potentially we'll be able to have 10 who are at different stages of coming to market and are willing and are able to come and pitch and get the first round of sentiment from the industry.
Thank you. Fred, yesterday I was at a function where the Fund Managers Association honored me for the 9 years I've been with them. And we were calling them owners of capital. But they told us they're not owners of capital, they're allocators of capital. So Fred, you've heard that the aspiration of this group here is to have 1.6 trillion shilling worth of REITs by 2030. I think that's what they're committing to. Do you see a massive interest coming from the allocators of capital? And what would be the major concerns for them in making that investments? Now that you've mentioned that the 2 traditional asset classes has also proven to be risky, do you see this happening?
Certainly, Jeff. As Jeff says, fund managers might look like they are wealthy. We are not wealthy. We are just allocators of capital. This money does not belong to us. It belongs to trustees of pension funds. So we hold the mandate in a fiduciary capacity on behalf of pension funds. But because we are heavily involved and we guide trustees in terms of where they allocate pension fund monies, then we have significant influence over that responsibility. So to answer your question, at the association level, and again, this association represents almost 95% of market out of that 1.6 trillion shillings. A majority of those allocators of capital are part of the association. The conversation has changed, certainly. Whereas previously, there was perhaps a laid-back attitude that, if I can get X on a treasury bond, then why should I take additional risk? I think events of last year are beginning to then now manifest very seriously, not only on these allocators of capital, but also the owners of this capital. So REITs obviously is an area of interest. We like it because for several reasons, but a few key reasons why REITs will become increasingly important is the diversification that they offer portfolios. It is an instrument that is regulated. It is asset-backed. It also gives inflation protection. So there are all the right reasons for we as allocators of capital to consider this asset. Its returns are also negatively correlated to other assets. So it ticks all the right boxes. So from fund managers' perspective, bring on the deals if they are fit for purpose, if they show potential. I do not see any reason why member firms, fund managers will not actively consider this going forward.
Thank you. Ngatia, I think one of the things that, what I know about CapFake is that you have ability to bring in capital through partnerships. Matching capital, I'm speaking about that. So from the foreign investment market. Do you see that happening here where local money can match international money to now provide a consistent growth of the REIT markets? And how do you undertake that within CapFake?
Yeah, absolutely. So what we find is that when we speak to some of these global pension schemes and asset allocators, what they say is, what are your locals doing? Before we invest anything, can you show us that this is actually an investable product that your own people are participating? So we work with pension schemes from all over the world to try and show them these opportunities, together with partners like the World Bank and USAID, who are our sponsors actually, to try and now crowd them in as well. But we have to lead.
So you can see it's not 1.6 trillion. It's more than that. I think we just need to see more and more of these investment grade REITs. Now, still on that, how does governance work within CapFix? So you bring the pension funds together. How do you make your decision? What's the decision-making process? Maybe you can just give us some highlight on that.
This is a good point. Good point to make it clear. We are not fund managers, so we're not making any investment decision. What we are trying to do is to bring to the pension scheme community and your fund managers the investments that we have worked on, like with the REITs Association of Kenya, that we have screened, we have checked, certain obvious elements such as, do the returns make sense? Do the promoters have a good track record? What's the timelines for closing? And then now we bring them to your fund managers, who then now determine the suitability based on each pension scheme's portfolios. So what we do, we can call it step one, right? And then now we work with the fund managers to help them assess those opportunities. In many cases, we provide the due diligence on the tax side, on the legal side, operational as well, which is an added cost for any pension scheme that would want to look at these alternative assets. But together with the likes of the World Bank, USAID, and the sponsors I mentioned, we're able to then now take that expense off the plate of the pension scheme and then now carry it for ourselves. And hopefully that makes it a lot easier for the pension schemes and their fund managers to review these opportunities. So in terms of our governance, if I can just speak very highly as an association, we do have a board, and that board is made up of our members, at least trustees that represent our members. We also have representation from our stakeholders, such as the Fund Management Association. We have a seat there for the FMA that's currently held by the chair of the Alternative Investment Committee, to ensure that we're all moving along in the same direction.
Thank you very much for that. At least, so you all know where to stop in. If you want to come here, first line due deal is done here, and you get your screening tests done with Ngatia, and then you can move on. Mbithe, back to you. The experience, I remember, there's nothing easy like being a test case in this market. So I happen to have brought in many products. And being the first time products, we go through the normal product cycle of going through depressions and then coming to succeed. Now the Islam Fahari, which initially was the Stanley Fahari, went through a very difficult cycle. What has the exchange done to deal with issues of valuation and basically to then, how would you recommend the REITs to, what approach would you recommend they take in order to avoid the challenging experiences we had?
I keep telling Ruth to write a book first. And we'll sponsor the launch. But it's on a good note, because I call Ruth the professor of REITs in Kenya, because she's been able to sit through the first REIT and up until this point in time. Jeff, I would not call ILAM a failure. I would actually call it a success, because if it did not come to the market, if it did not stand the test of time, perhaps we'd not be here still discussing REITs 10 years later. I'm afraid to call for another round of applause for Ruth, but Ruth, we applaud you. Nonetheless, from when ILAM came into the market, and now we have Aecon, and now we have actually we have Aecon, and then we have LapTrust, and actually ILAM has now left the main market and come to USP. And I think one of the things that you did champion when you were the CEO at NSC was the platform of the unquoted Securities Exchange, where it's a private platform and it actually then allows you to incubate alternative assets. Because I think one of the challenges that were faced were the fact that ILAM was in the main market and some of the retail investors were evaluating it as though they would be evaluating a stock. And that really had an impact on pricing, as well as how that register was introduced. I think Wayaki covered it very well when he talked about restricted and unrestricted. Now for Aecon, which came onto the USB platform, it was a restricted issuance, which meant even its own book was actually restricted, and the number of investors on the USB were restricted. So we are finding the trend is if you're introducing a REIT, then you want to sort of incubate it on the USB platform where there are not 2 million investors, which is the case as the main market, but you actually have investors who are aligned to your long-term vision of unlocking value over time. And if you come there once then that has been stabilized and you actually introduce it using the net asset value approach, then as long as you're introducing additional units, or if you're in a development phase, then the investor, typically the fund managers, would be able to then book a return on an annual basis, and they can actually adequately and accurately project what kind of return that would be. So we've seen a trend of companies that are in the construction phase coming through the USB and then incubating there for maybe 3 to 4, 5 years, and then at that point then they move into the main market. So I think that has been one of the opportunities that the NSE has provided.
Okay.
I think if I may, with such an esteemed panel, these are the people to grill, right? These are the ones. So I know you're all dying to ask really, really tough questions, and I really, really want you to. So please be thinking about them. And while you do, we're going to go straight to the questions that were thrown at me. Remember, please don't kill the messenger. Mbithe, to you, why has the performance of the existing REITs not been that strong at the NSE? Response?
Which one?
Any. They didn't even specify, just any.
So we have 4 REITs. 3 out of the 4 have done well. So as I mentioned for ILM, now ILM has actually gotten out of the main market and is coming through the USB platform. For the Acorn, we've actually had it valued at the net asset value, and it has been giving returns of about 12% year on year if you estimate the capital appreciation as well as the dividend yield. But I do like the question, because sometimes one of the things that we have to keep addressing as the exchange, which I don't think should be the case, is somebody looks at one particular perspective and decides that everything is not doing well. So someone will go and say, there has been no trading, or why is ILM leaving the main market, and how are we going to participate? And based on that, and you don't probably look deeper into why they are moving from one market segment to another, then you decide they're not working. But REITs are working. REITs are generating value for the issuers. REITs are generating value for the investors who are aligned to it. And I think there's a lot more value that will be unpacked. That's probably how I'd like to look at it. Not too sure if I answered your question.
No, that was perfect. Thank you, Mbithe. All right, please put your hand up if you do want to ask a question. Now is the timer, because time is ticking and you don't want to miss out on speaking directly to these people. Please don't be scared. I'll go again to... perfect. While I go there, Jeff, for you, what progress has RAC made in getting tax exemptions in relation to investing in REITs, please?
I thought I was the moderator. Anyway. I think RAC has made a lot of progress thanks to Ken and his predecessor, Edward. We've actually been able to make major achievements around the tax policy, which is the key concern at the moment. One of the major achievements is now that the REITs exemption is actually in the tax policy, but yet to go into the Act, which is what we're pursuing. There's a lot of engagement with the National Treasury, with Parliament, in different committees, to really look for more incentives for the REITs market. And so there's a very good collaboration right now through RAC as the advocacy body for the REIT sector.
So my question is, again, to the discussion on collaboration, especially when you're looking at pension schemes as the capital owners. We've seen with time there's a challenge around handling that asset class from an individual perspective from scheme assets. So my question is to the NSE and KEPFIC in terms of how do you think a collaborative effort would be had with capital owners to try and package this, and this would be borrowing a leaf from the recent LAP fund REIT. Thank you.
Thank you. From the KEPFIC side, I think what's unique about us is we have both sides of the equation. So our members, being pension schemes, are both investors and property owners. And so they're both looking at REITs from different angles. In many cases, like I said, a lot of these pension schemes have direct property holdings that they would like to to have some form of liquidity on. On the other hand, we have members who are looking to take exposure into property but don't want to go the direct route. So it's essentially the same investor base that through an instrument like a REIT and through associations like RAC, ourselves and the likes, we can bring the two together. So that's how we see this collaboration working very well. On the international front, I think you'll struggle to find non-specialist investors coming to look at a direct property investment, whereas what you'd find is the most likely vehicle that they would use is a capital market instrument that they can sell, or they can trade. So they would also be keen to use REITs, because that essentially is how they invest in their home markets as well. So we're catching up to what is the norm in more developed markets, and at its heart, what we need is just more product. We need more. I would say four REITs is nowhere near enough. You don't want the discussion to be between 1, 2, 3, or 4. You want it to be between 50, 60, or more. Right? If you look at the equity market, it's the same thing. If we only had 5 listed equities, you'd find probably that none of them would have been invested in. They would be all deemed as exotic. Whereas we have 60. And based on the 60, you can then decide which are the ones you want to invest in. And that's the same thing we want to do with the REITs, to have more pipeline come to the table so that this asset class stops looking like something that only sophisticated investors or those that are cowboys and risk takers would look at, right? So just trying to ensure that REITs are then now accepted as a normal, viable instrument through which we can invest in, or through which pension schemes can divest their property portfolios via.
Okay, so we want more REITs. What do we think is the bottleneck? What is the issue? From an issuer's perspective, do we think? Who wants to take that, Jeff? You're up.
From an issuer perspective, Mbithe, do you want to chime in?
So the feedback we've actually gotten from some of the meetings is sometimes the structure and the regulations. So Kenya is quite innovative. There are people we find out there and they're really running off-market REITs. So they figured, I'm going to sell units, and it's nothing illegal. It's just sometimes when they say when it comes to now the element and cost of compliance and all the different stakeholders that you need to have, especially for issuers that are already running their own projects, then the value proposition doesn't really add up. Then another one has certainly been mentioned here. It's the stamp duty. And I think one other one that at least we've heard from some of the pension industry members is the element of the trustee. So moving ownership to somebody else, but we have seen the LapTrust REIT come in with a hybrid structure. I think we're in a good place because it's been 10 years since our regulations were done. There was supposed to be a cycle of review of the existing regulations, but the law changed. And we have a regulator between ourselves and the Capital Markets Authority that is more facilitative. And in terms of anybody wants to come to the market and you actually are able to justify why certain structures make sense or why certain levels of compliance would actually deter you and are not causing any risks to potential issuers, largely because we're using public money, then we're in an environment where people are more enabling and want to support the issuers to come to the market. But I don't think I'm the right person. Fred is here.
The one last one I'll put in there is the investment psychology of Kenyans. Kenyans want to own. We don't want to aggregate, and that's been a big problem. But we're seeing a shift, especially among the middle, up on mobile Kenyans, the ones 10 years younger than me and above and below. They're looking at aggregation. And if you look at most of the apartments blocks coming up, in Kileshwa, in Isili and everything, this is aggregation. It's not one person putting up all those blocks. So I think that investment psychology is what we need to change. We need to capacity build, financial education, so that we can be able also to aggregate retail to come together and go into aggregators who then can actually come and support the REITs market. I think that's how we'll be able to unlock the current slow uptake. But I can tell you Kenya's done well. I mean, if you look at in Africa, it's only South Africa that's ahead of us. I think maybe, I think South Africa possibly. So with 4 REITs, we're moving in the right direction. It's a good scorecard.
And of course, having brilliant workshops like this. So thank you again to Joint Capital Markets Program. But listen, I'm going to give you one more chance to ask a question. And for our esteemed panel, I want in a sentence, please, where do you want the REITs in Kenya to be in 5 years? In one sentence, and you can't steal each other's ideas. Last call for any questions for our esteemed panel. 5, 4, 3, 2, no one. All right, Jeff, you're up. Where do you want to be in 5 years? Not you personally playing golf, but REITs in Kenya.
I think I want to see REITs in Kenya scale up to not less than 100 REITs in this market, because I believe it can reach there, and more diversified REITs into things like industry, social REITs, etc. That's my prayer.
And golf. Ngatia?
I'd love to see a REITs board, a specific REITs board on the NSE, so not just a catch-all for everything that is not on the main market. That would be the result of having more REITs, like what Jeff has said, but also specialized REITs. You might want to take a exposure to healthcare, for example, and not to residential. So having different REIT strategies would be critical. It would be really interesting for us as the investment community to then participate in. So healthcare REITs, hospitality REITs, affordable housing REITs, and the likes.
Zorva's already writing for his he wants to be on the board. Quick. All right, and Fred.
I'll pick both the ideas and combine them. I think fund managers want variety. They want more REITs available. We are allocators of capital, and we are looking for places to deploy this capital. So the more they are out there, the more we are likely to pick. But when you give us a choice of 3, 4 options, and maybe we don't feel that the underlying assets are, have got the right quality, then perhaps that's the reason why some of us have not invested in that.
So we all need to be braver and do more, work harder. Mbithe.
I would like to see 500 billion raised through REITs, through the NSC, and I would like 70% of that to come from this room. So I hope all of you can give us 350 billion, if not more.
Money for everyone. No. Mbithe, I just quickly, very, very quickly, someone actually mentioned to me, and I can see him, I'm looking at him right now. He actually said to me, by the way, Davina, can you ask about why there are so few women in REITs? Do you want to comment on that? Could you comment on that? For obvious reasons?
Maybe the men should.
Jeff, it's all you.
No, on a light note. But maybe, I think to answer that, I know it's International Women's Month this month, and we celebrate women, and we celebrate the progress. But I think let's also balance it with, we also have the spaces for the right professionals. And I think this room is more or less equally represented. So if we focus more on what do we need to bring on board, how are you getting the capital, and how are we all working together? As women, we can bring our strengths. As men, they can bring their strengths. And I think the focus is how do we actually move the REIT industry as well as the economy forward. Thank you.
There you go. And be there for president. All right, round of applause, please. Everyone, thank you so much. Thank you.